Madhavan Menon, Chairman and Managing Director of Thomas Cook India, joins us now. Mr. Menon, good morning. Thank you for joining us. Now, walk us through the highlights of Q4. What contributed to the growth?
I think an important point I want to make is that we're a holding company and we've made several acquisitions over the last 4 years. So it is important to look at us from a consolidated point of view because that will reflect the true performance of the Thomas Cook Group. Having said that, I must mention that we were able to narrow the loss for the last quarter of 16-17 from the previous year for two reasons. First of all, last year we took a hit of 100 crores to our bottom line due to a one-off accounting change that we made at Sterling Resorts. Even the 6 crore loss that you're seeing in this quarter is despite the fact that Sterling booked a loss for the quarter. However, I must also go on to add the fact that for the travel businesses, this is an investment quarter where we advertise and we get the bookings, and the actual travel only happens in the April to June and the July to September quarters of the next fiscal. So I think what is important to recognize is that on a consolidated basis, on the back of improved performance of the travel businesses and Quest, we were able to narrow the loss significantly.
So Menon, take us through your segmental growth, sir. Where can you see follow-through growth coming in?
So I think all the travel businesses and the financial services businesses are expected to register growth. I don't have to mention anything more about Quest beyond saying they have put up an excellent performance in the last quarter. They're expected to do even better in the coming quarter. My expectation is that both the travel businesses, the financial services businesses and Quest will have strong quarters ahead of them. From the travel businesses and the financial services business point of view, I must mention that because of the seasonal nature, they will register strong performances. In the case of Quest, they're growing at a phenomenal speed, and this is expected to continue. Sterling did face some problems in the post-demonetization period, primarily because their products were geared for the longer term, and because of the uncertainties that emerged around demonetization, especially in November and December, we did see a slowdown in their vacation ownership sales. But I think as the confidence has returned to the economy, vacation ownership sales are expected to pick up in the coming quarters, even though this may be a little slower than our normal businesses.
You recently inked an agreement to acquire Kony's Global Network Destination Management. Can you give us more details on what does this bring on the table?
So I think the first thing that it brings to the table is the fact that we now have a global footprint. Earlier we were restricted to Hong Kong, India, Sri Lanka and Mauritius. With this, we will have a presence in 22 countries, stretching from Australia into Southeast Asia, into China, India, South Asia, if I may use the word, Southern Africa, Eastern Africa, Mauritius, the Middle East, and the United States. Now, how does this benefit us? First of all, let me address the companies that we bought. The companies that we bought essentially bring in tourists into the respective locations that they operate from. And these are high-end tourists sourced primarily from Europe and the United States, where the margins afforded to us are higher than several other countries that we operate in. Now, that's one aspect of it. The second aspect is how do we take our outbound businesses, especially leisure travel, corporate travel, and leverage off the presence in these markets so that we can actually provide our customers with a global footprint. So I think if I look at it over a period of time, there is significant benefits that will come to us. However, if I just step back and say, look at the profitability on an as-is, where-is business, as-is, where-is situation right now, we are talking of this business generating about $4 million of bottom line to us with immediate effect. And that is expected to grow significantly over the next couple of years.
Right. By expanding a global footprint, what kind of incremental revenues will Thomas Cook India get from overseas market? What is the plan on that front?
So I think with the latest acquisition, you're going to see, if I take $4 million, that's at current market rates, it's about 30 crores being added in the current fiscal. I think what is important to recognize is that they were a part of a large group, and therefore they were constrained in the type of business that they did, primarily because there were multiple divisions that had overlaps with them. But I think what is going to happen going forward is that, true to the philosophy of the Fairfax Group, we will allow them to function freely and independently, and our expectation is that over the next couple of years, this business alone can generate a bottom line of about 100 crores.
There's a lot of new businesses springing up. Would you look at investing in some of the travel startups?
Look, it's a good question you're asking me, but very honestly, we are focused on building an omni-channel presence for our travel products. And right now, what we are doing is we are acquiring technology that allows us to function both online as well as in the bricks and mortar space. And my expectation is that in the last fiscal, if I look at March 31, 2017, as much as 21% of our sales of holidays was online, and this is a clear move from about a year ago when about 15% of our holidays, package holidays, were sold online. So I think there is a movement online. We are not bucking that trend, but is the acquisition of a startup the way to do it? We don't believe so at the present time. We may change our mind going forward, but right now we're not looking at any startups.
Sure. But what do you think is the impact of the GST rollout on your business? How are you mapping that?
So, I am going to be a little philosophical here and look at it in two stages. In the preparatory stage, from what I understand and the experiences that we have gone through ourselves, there is a huge amount of preparation. And I'm not, I will only end by saying I'm not sure if enough is ever enough. But in the post rollout stage, my expectation is that it will be evolutionary. We will face all sorts of problems. But I think over a period of 6 months to a year, we will see the benefits of the GST beginning to flow in. At the Thomas Cook Group, we're clearly putting all our processes in place. We are going to be ready for a July 1 launch. However, we have vendors, we have counterparties, the responsibilities have just grown in the administration of this entire process. So I think it's going to take some time getting used to it. But my expectation is that all in all, closer towards the end of the year, we will see things stabilizing significantly. From a business point of view, I don't expect it to impact us because with, the GST rate on outbound holidays being 5%, and our foreign exchange business remaining almost untouched, I don't believe we will see any major impact in the GST space.